Twitter shares, they are surging right now. This because Tesla CEO Elon Musk has now taken a passive stake in Twitter.
I do think that he's going to probably try to increase his stake, and I think that employees at Twitter are increasingly nervous.
Boom! Breaking news. Elon Musk offering to buy Twitter for $54.20 a share.
Elon Musk tweets that the $44 billion deal is, quote, temporarily on hold.
Elon Musk responding on Twitter to allegations of sexual misconduct.
This is unprecedented. A single individual spending his own fortune, over $40 billion, to buy one company.
It's been extraordinarily unusual for everybody involved. I mean, reporters covering the situation, people that work at Twitter, investors that are trying to navigate what Elon Musk plans to do.
Years from now, I mean, this could be a risky bet. Now, betting against Musk, it's like betting against Tiger Woods. I mean, it's not really been one that's worked out for the cynics.
It's anybody's guess how Elon Musk wants to change Twitter if and when he takes over the company. So before Elon made his takeover bid, Twitter was just starting off with a new CEO named Parag Agrawal. He was the hand-picked successor to Jack Dorsey, who had served as CEO since 2015.
Thought that Dorsey was really going to turn around Twitter. And of course, being CEO of other companies, especially with Square, I mean, there's a distraction factor there. And Twitter started to make some baby steps in terms of engagement, increasing user growth quarter over quarter. But advertising, that was the big issue.
Twitter makes most of its ad revenue from big brands, blue chip advertisers. Whereas if you look at its competitors like Snapchat and Facebook, they make most of their revenue from small and medium-sized businesses. And so when you think about Twitter and innovation, they kept creating products that catered to big brands, as opposed to innovating on the advertising side for small and medium-sized businesses.
In a social media arms race, their biggest issue was engagement, monetization from an advertising perspective, and just losing more and more share, the likes of Instagram, Facebook, TikTok, and others.
In early April, Elon Musk disclosed that he had over a 9% stake in Twitter, which he had been kind of snapping up shares since early this year. And it was a huge surprise.
Elon Musk and Twitter. First, he became the company's biggest shareholder, then plans to join the board suddenly reversed. Is there a bigger plan of action in the works?
I think when Twitter offered Elon Musk the board seat, they saw this as a huge win. What Elon was thinking at the time, from my vantage point, was this is a temporary measure to be able to get a little bit more visibility into how the company works, how the board works.
So when Twitter invited Elon to join the board, they put a cap on how many shares he was able to own. And so we think that might have been the sticking point for Elon, because his ultimate goal was to buy Twitter. So he rejected the board seat offer and went ahead and bought the company.
$44 billion, it continues to be a head scratcher for a company that I believe is probably worth closer to 30 or 35 billion. But when you're the richest person in the world, you can do that. And that's why Twitter investors, when they saw the 44 billion, they were popping champagne or drinking their favorite alcohol.
Now the sentiment inside Twitter is just sadness. There's a really bad morale. People are worried about their jobs. They're distracted from being able to conduct business as usual. For people on the sales side, it's really frustrating because advertisers don't necessarily know what to do with their partnership with Twitter long term.
If this transaction goes through, Elon Musk plans to take the company private. No more earnings calls, no more printing out their financials for the public to look at. He's going to be able to basically do what he wants with the company.
Elon Musk is looking to be more than just the owner of Twitter. Sources tell our own David Faber the billionaire is expected to serve as the temporary CEO.
More headlines out of Elon Musk's Twitter deal. Speaking at a Financial Times conference, Musk saying he would reverse the Twitter ban on former President Donald Trump.
Elon Musk has not made it a secret that he plans to pull back some of the content moderation policies at Twitter. So we know that's coming.
I think the problem for Twitter is that in the past, and at times today, it's successful. And The worry is that you start to bring on some people that were banned. Of course, the big issue would be Trump as he ultimately come back onto the platform.
But you got to keep in mind, Twitter has been spending years trying to tamp down and moderate the speech on its platform in order to be more appealing to advertisers. This is why Elon Musk thinks advertising shouldn't be the main part supporting Twitter. He's talking about a paid product. He's talking about charging companies and high-profile individuals to use it.
Twitter makes most of its advertising revenue from big companies and big brands. And so if you pull back content moderation, you risk those big brands pulling back their spend. For a company like Facebook, which makes most of its money from small and medium-sized businesses, that's not a huge issue. If that were to happen to Twitter, it would be a huge problem for them.
Look, I mean, our view in terms of Twitter as a business model, it's very difficult to turn this around. And if you look at Musk's success stories from PayPal to Tesla to SpaceX, technology success, Twitter's a different animal.
There are a million reasons why this deal couldn't go through. Elon Musk is a fickle individual. He could change his mind and decide, hey, I don't want to do this anymore.
The Tesla CEO tweeting this morning that unless Twitter can prove that less than 5% of its accounts are bots, that the deal, quote, cannot move forward.
This is probably a negotiation tactic on behalf of Elon. The market has come down a lot. And so he's probably, using the guise of, true active users as a negotiation ploy.
There is a clause called specific performance where they can force him to take it. And I don't know how he gets out of it.
Report in the Business Insider stating that Musk's SpaceX had paid $250,000 in severance back in 2018 to a flight attendant who accused him of sexual misconduct. Now, CNBC has reached out to SpaceX for comment but hasn't received any response thus far. But that hasn't stopped Musk from responding late last night on Twitter about the article, saying, "The attacks against me should be viewed through a political lens."
So as far as the financing, what we know so far is Elon Musk sold several $billion worth of his Tesla shares in order to help start financing this. So you got to keep in mind, Elon Musk doesn't have $200 billion in cash in his Bank of America checking account or whatever he uses. So much of his wealth is tied up in the shares of his two companies, SpaceX and Tesla.
The financing at the end of the day is really leveraging his position in Tesla. 95% of his net worth is in Tesla. So if you look at the debt, the equity financing, it's Tesla shares. It's been a frustration for investors in Tesla. They don't own Tesla to have some sort of deal risk exposure to Twitter.
At the same time, there are reports that Elon is talking to other wealthy individuals, offering them a chunk of Twitter in exchange for them helping finance it.
If it falls through, it's not from a regulatory perspective. That's not the problem here. It would be either a financing issue, which I think Elon Musk has proven himself to be determined enough to figure that out, or because he's had a change of heart and he doesn't feel like taking this on anymore.